If you're a beginner investor, then this video is for you. Now, if you're an expert investor, keep scrolling. Now, first things first, never invest in what you don't understand. Now, I see a lot of people make this mistake. They go on investing into things that they can't explain, and then they run into problems and troubles at the end of the day. Now, in this video, I'll try to break down two popular investment products, GICs and stocks. Now, a GIC, called a Guaranteed Investment Certificate, is a low-risk investment where you deposit money into a bank or with your bank for a set period of time and you earn a fixed guaranteed interest rate. So think of it as a fixed deposit, So the attributes of this particular investment product is that, one, there is a guaranteed return, right? So at the end of the period, you're guaranteed, X amount of money. So you are able to plan around that to say, hey, at the end of 2 years, I'm going to receive XYZ amount of money. The second one is that it's zero risk, so it's 100% risk-free. And the third one is that the growth on it is very, very low. So that means very low interest rates on it. You could see from about 2.5% or 3%, depending on the banks. And that's just basically based on the concept of, low risk, low reward. So the fourth attribute should be that, it's best for short-term goals. So you want to invest for 1 month or 1 month to 2 years. Those are considered short term. So say you want to build your emergency fund, or you want to invest towards, a house down payment. Those sort of things will be things that will be, suitable for you to invest into a GIC for. Stocks, on the other hand, represent, partial ownership in a company. So you buy Amazon stocks, you become a shareholder. You buy Apple stocks, you become a shareholder. So it just basically gives you a slice of the company. You own a slice of the company, essentially. So that gives you a share of its profit and its losses. So for stocks, there are really no guarantees, right? You don't know what's going to come out of it at the end of the day. It's also very, very risky. So it's highly volatile. One big news could drive stock prices down to the ground. So for example, when Trump announced, the removal of tariffs, the stock market went crazy. But yeah, it does have high potential growth. So it could grow as high as, 7 to 10% very long term. So there's potential for stocks to really appreciate, especially when you hold it, for the very long term. So stocks are usually best for long term, investments towards, wealth building. Now, the key thing to note is that, different investment products serve different purposes, right? And they also cater to people of different risk tolerance. So know your risk tolerance. If you have a low risk tolerance, you know what instruments to go for. If you have a high risk tolerance, you know what instruments to go for. So when you know your risk tolerance, you know what investment works best for you before you jump into making any investment. Now, if you do have no investment knowledge, you're a complete beginner, you could allow a professional portfolio manager handle your investments for you until you build your knowledge on investments. Now, link in my bio to book a free consultation on how to start investing.